Greetings, members one and all of the Salivation Nation, the velocity of money and gold. Let's explore. I'm going to use the opportunity of this gold unboxing to talk about the velocity of money and how it kind of relates to gold. And who controls the velocity of money? Well, it's essentially, it is the free market, maybe in a sense, but in terms of how it's produced and how it's printed and how it's put in the system, that is up to the government and the banking institutions to get that money to us. And we've seen how they have been failing in their duty, in a sense, to get some pocket change to us, but also even just direct payments to American citizens from the stimulus acts that they've done, the relief packages that they've put out. For some, it's taken quite a long time. Well, this unboxing is a result of finally getting the stimulus payment from the federal government. It didn't come as a direct deposit, but came as a check this time. And so even the government has trouble spending money that they allocate and they authorize, because that who is control of expenditures from the government is the Congress. When the government spends money and to inject it into the economy, well, essentially they have to create new money to do it. So I wanted to take the opportunity to take that money and apply it to sound money, because we know what the future of the dollar is going to be if they can continue on this road. So I've got this knife. I could use it to open this box. I'm going to try to do it with my bare hands. And as always is the case, we have a package within a package. And we have to open this up, remove the paperwork, and we have a direct fit capsule. Nice. All right, very good. One of those coins, and we have 2 gold coins. Yes, indeed. This is the now obviously I didn't get enough of that stimulus to buy these, but one was just a regular budget item. But this is a Britannia from 2020. Yet another one of these Britannias from 2020, which I especially like because I just like this design better. I love the radial lines coming out from behind. I like that better than the waves. And the privy mark, I think, is just with the trident, I think it's just too busy. It's fine. It looks good quality, but I think I like this better. So there is 1 ounce of gold there to add to the stack. And here is a maple leaf. Very pure gold coin. You've heard me talk about this before as well. And this what's so special about the Canadian maple leaf. Its purity, its security features are second to none. And they've been ahead of the forefront of this for quite some time. So this is why I decided to pick up another gold maple leaf. And I love its compact size and extra thickness. For those of you familiar with my channel that goes way back, I am down with the thickness, for sure. And the Royal Canadian maple leaf does not disappoint. Look at the difference between the Britannia, both Commonwealth nation coins. The Britannia is much, much lower, or much wider diameter. 30 millimeters, I think, for the Britannia. 30 millimeters for the Royal Canadian maple leaf. And it is 30 millimeters, 32 and 30 millimeters. There they are together. And so that is the thing, the velocity of money. And as you know, most of us here would agree that gold is not money. It does not, I'm sorry. Most of us here would agree that gold is money, but does not have any velocity to it. In other words, it is not circulating as currency, whereas the dollar is. And so when you take that into account, it really puts it into perspective in terms of the what it's all about. And so when you see the government issuing payments and they're having a hard time getting those payments to people, why is that? It's a very interesting thing. Some people going literally months and months and months without getting those payments that they rely on from the government. And that's just it. There's your problem, folks, relying on the government. And so I'd rather take that and put it towards money to preserve my wealth. And it's a lesson to be learned, and it's sending another message of how this works and the velocity of money and how that can translate. And so that's the whole reason for doing this and for making these purchases, is to kind of capture and preserve what true money is, or what I call sound money is, but the velocity of money is kind of what causes inflation in a sense. And we're already seeing it in a way. There's some of these payments that have gone out to people, and the reopening of the some aspects of the economy are causing the velocity of money to increase. And it is also creating a demand that we for goods and services that are having a hard time keeping up with that demand, and so prices are rising there as well too. So we have a dual-pronged aspect here with the velocity of money that causes inflation. Whenever money circulates at a higher rate, then it causes greater demand for goods and services, and that is what causes prices to go up. As well as, and this happens in a normal economic scenario. We are not living in normal economic times because we're still dealing with the remnants of the COVID-19 crisis. And in fact, we have this Delta variant that's out now that can threaten the velocity of money. And even if things don't totally close down, some people may decide not to participate in the economy as they would have before. And so that is something to consider here, is how that can have a natural effect without any government mandates or restrictions. However, I believe some of these government mandates and restrictions are draconian and will have a deeper impact, especially if the government decides and Congress decides to again continue to put restrictions on people and stifle economic activity. But nonetheless, that will mean more money being printed and sent to people for direct payments. We're literally in a point of universal basic income for some groups of people, at least until December with these child tax credits. That money getting to people on a monthly basis, well, that's going to be somewhat of a challenge if the government took literally months and months and months to get this payment to me to buy this gold. What is it doing for other people, that rely on it? And as the velocity of money increases, well, that means that inflation will continue to flourish, and at some level or point. Now, there could be conditions, especially if we look at the metrics, and you've heard me talk about this before, measuring it year on year, where inflation may seem to go down for a time, but then it could rise up because of the slow economic activity during the height of the COVID crisis. But it was about this time last year when we started to see things slowly open up again to some extent. And so therefore that could change the metrics for the year-on-over-year numbers for inflation. But regardless, I believe inflation is here to stay, and even if it seems transitory by the statistics for any particular point in time, because of these trillions of dollars that are being disseminated across the nation in one form or another. And keep in mind, too, that a lot of that money is going to prop up the markets, the stock markets. That's why you're seeing all-time highs. They're playing around with that money there, which is not hitting Main Street. That money hits Main Street, and we have repatriation of dollars to some degree coming back to us from European and other nations around the world that don't want the dollar as much. Then you're going to see potentially massive hyperinflation. And there is a chance that the dollar could be threatened as a world reserve currency. And what will that mean for the velocity of money? People will want to spend it even faster, and it will pace up, it'll pick up. They want to spend it faster before it loses even more. And then you're talking about hyperinflationary measures where literally in the morning you have a dollar that is maybe worth 50 cents as where it was maybe 2 weeks ago, and by the end of the day that dollar is worth 40 cents. So you want to get that dime's worth of difference out of it, so you spend it that day before it loses another dime's worth of value. That is the thing about this velocity of money, and how it could creep up on us, maybe even more than we think, at a faster rate than we think, because by the time it happens, by the time you recognize it, it's too late. And so this is why I believe it's crucial for people to have a protection, a way to preserve their wealth with gold and silver. You don't have to get a whole lot. You don't have to get 2 ounces at a time of gold or 100 ounces of silver at a time. And just get what you feel comfortable having. Do your research on the metals, how they performed over the years. Look for buying opportunities when the price goes low. And as of the recording of this video, they are low. I bought these when they are higher, based off of when we got that payment, stimulus payment, when that stimulus payment came in. So there's a lot of different things to consider when buying precious metals, and it's all about what your level of understanding is. But through the course of history, gold, especially gold, and silver too, though, have proven themselves time and time again as wealth preservation tools against economic instability, which also, by the way, includes one of the factors in that is inflation, deflation, and stagflation. So there's different ways and different theories as to what could happen, but even in deflationary times, gold will do well. Even if the price goes down compared to other things going down or crashing. And the only way we would get this deflationary period is if the government or the Federal Reserve repatriate or takes back in from these banks a lot of these dollars that weren't distributed. That's tightening. They do these tightening policies to an extreme level, raise these interest rates and pull in all this cash that thinks out there that's not being spent. So things to consider. That is kind of interesting. Again, gold, there's nothing really that anyone needs to worry about with the velocity of gold as a comparison to the velocity of cash. And because gold has stood the test of time, you can only mine so much of it at a time, although there's a lot of companies out there looking to find new treasure of gold out there with exploration and the like. But they can only dig so much of it out of the ground, and it takes a lot of time to bring those results back in order to get drills out there moving to bring it in and process all of that ore into refined gold. 4 nines fine gold in both cases here from the United Kingdom and Canada, the 2 biggest Commonwealth nation bullion coins in the world. Fascinating indeed. Let me know what your thoughts are on this topic, the velocity of money and gold. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.